So you can see my chart. Okay, fine. Now, just like I always do personally, this is Emmanuel Odogwu from PH. Just like I always do, where I normally start from the US index, right? So normally start from the US index, right? Because most of the instruments we do trade, most of us will get to trade USD, right? Or currency or instruments that is directly or indirectly connected to USD, right? Like the gold and the other uh, commodities. So now, if looking at the US index, you can see that US index on the H4 time frame has been on a steady downward trend. Most of us are intraday traders, and most of us equally would like to trade long term, right? So you're very busy. Your best bet would be to trade long term, right? So if you're trading long term, you always want to consider H4 time frame, right? But even if you're trading intraday, right? Even if you're trading intraday, you also want to consider H4. The reason is the long-term traders, right? Those that are into the market with big fund, large fund, big money, right? Just like I always say, the market is divided into two: big money and small money. All of the retail traders fall under the category of small money, right? So all of the retail traders fall under the categories of small money. Please, if you have questions, Julius, I can see you there. You can just type it on the chat room. Then later I will attend to it so that we can continue. So if you are a retail trader, you also want to look at what the H4 time frame is doing. The reason is so that because that is where the big money is focusing on, right? That's what the big money is focusing on. So now, from what we can see, looking at the structure of the market, you can see that as far as we are concerned, and as far as H4 is concerned, the USD index is still on the downward trend. Now, remember, if it's on the downward trend, you'll be seeing some impulsive move to the upside, right? And that would be some strength for the dollar. For example, you can see this move to the downside, right? So this move to the downside is what actually took out this low. So this was the recent low before this move up. Why it took out this low, then also it retraced to the upside. Now that retracement is for profit taking, right? Now it impulsed again and took out this low, right? So now it has retraced again to the upside. So normally you'll be thinking now it is going to give us another leg, right? That will take out this low. So normally we are expecting US index, right? Normally we're expecting the US index to push again, right, and take out this low to the downside. But guess what? It will not just be instant, right? So it will have to dribble a little bit, go up and down, just like it dribbled here. Later it push up the downside. However, However, if this leg, right, is able, if this price is able to take out this high, right, then the market has changed. But as you can see right now, for all of us intraday trader, we can see that we are having a bullish candle build up on the H4 time frame, right? So a bullish candle building up, that is a sign of momentum being pumped into the dollar, right? As you can see right here. So let me zoom into the area. That's a sign of momentum being pumped into the dollar, as you can see right here. Okay. So if this candle is able to close, if this candle is able to close as a bullish candle, guess what? We're going to be seeing more bullish movement to the upside for today on USD. On USD, take note. If this candle is able to close bullish, by bullish I mean if this candle can close as a blue color, right? Because the blue is my bullish candle, right? That's the buy candle, as most persons want to call it. Okay, so we have analyzed the USD index. We are seeing some strength in the dollar. That's the analysis. We're seeing some strength in dollar. However, bearing in mind that on the H4 time frame, this index is going down. Now let's now start with our Euro USD. All right, one of my favorite instruments, right? Euro USD. Now, from this Euro USD, like I always do, we are going to start. We are looking at the H4 time frame first. All right. So as you can see on this Euro USD, Now, those of us trading long term or we are swing traders, right? I want to believe your buy trade is still open now, not for the intraday traders, but I know that we have. Okay, now now those of us swing traders, you can see that Euro USD is still on an upward trend. That means I want to believe your buy trades will still be open because this is volume pumping to the upside. Sorry. So because this is volume pumping to the upside, and of course, technical analysis, you want to consider volume, you want to consider price, and of course, open interest. Three components that makes up technical analysis: the price, the volume, and of course, open interest. So, but from what we can see on this trend line to the upside, you can see that it is largely on an upward trend, right? Now, how do we know it's an upward trend? It is because whenever it pumps to the upside, just like this, whenever it pumps to the upside, right, it normally goes through a retracement. Now that retracement will not go below this low here. So this is the structural low, right? This is structural low, and this is the recent high. So this is the recent high. This is the recent high we saw, as you can see. Hello, everyone, please. Somebody, you can just unmute your mic and just let me know if you can hear me, please. Unmute your mic and just let me know if you can hear me. Just one person, that will be enough. Hello, everyone, please. Can you hear me? Okay, okay, okay. Thank you, Okoro. I can see you there. Lots seen. Thank you. All right. So now Now, this is a high we got, right? Now, whenever this low takes out this high, we call it break of structure, right? To the upside. Then, of course, it should not break to the downside here, right? If it should break below this low, that means the market structure have shifted to the downside. So as we are right now, this is still upward trend for the for Euro USD, okay? For Euro USD, we are still riding the upward trend. Now, we saw a retracement to this level. Now, if I use my Fibonacci and drag from this leg here to this high here, you can see that that retracement, right, came just inside between 50 and 61, right? And that is the discounted level. Once it goes below 50 level, that's the discounted level. So at that point, you won't think of buying again, right? You think of buying again. All right, so this is another impulse leg, right? And or impulsive move to the upside. Now, what do we expect? We expect this leg, we expect it to go higher than the previous high because the liquidity of targets is above this level. So we expect Euro USD, right, to continue the upward trend. It should trade around this area, right? You should trade around this area. So, but guess what? It has moved up to this level to give us equal high. So this is what we call equal high, right? Or relatively equal high. This high is almost equal to this high. And guess what? Whenever the market forms equal high like this, it becomes a target, right? We call it target liquidity. That means the next time the market is going to take it out. So possibly for today, we might see a move to the downside, right? To come and test this our verified support here. So possibly we might see a move to the downside to come and test this our verified support here. Then of course afterwards, remember it has created two highs and the market always like going for it, right? It's like a target. It's like when you set a trap, right? So that's the trap the market always sets, equal highs. Because whenever there is equal highs, right? So buyers will be waiting at this top here, right? So afterwards, they will expect the market, will expect the price to take out those equal highs. So this is my projection, right? Now, all of this may not just happen today, but please take note, very important. right? After giving notice equal high. So let me now give you trade direction for today, right? Trade direction for today. So we're already seeing that this is already a verified resistance, and we saw some strength. Remember, we saw some strength in the US index, right? So a strength, seeing strength in the US index simply means that Euro USD will trade a little to the downside. So we expect Euro USD to trade a little to the downside. Now, expecting that, we are now going to move to our 15 minutes time frame or 30 minutes time for anyone you want to use, right? That will be the time frame for you to take your trade, right? That will be the time frame for you to take your trade. All right, so on this time frame, remember we are looking at selling for the short term, right? Not for the long term. Selling for the short term. So if you sell, your take profit, you should be targeting a support level, right? Targeting any of this support level. The reason is Euro USD is still on an upward trend. So if you should sell, you should be targeting a support level, right? Now, what if the market spring up surprises, right? But you remember, you don't take out surprises from the market. What if market spring up surprises? I'm also going to give you a buy condition. So you want to buy anywhere above this high here. So if the market can trade above 1.10755, anywhere around here, please. You want to take a buy around this region, right? You want to take a buy around this region. But if this market trades further, right, below this area, let me map it out for you. If this market trade further below this area, then you want to take a sell, right? So you can see it's somewhere around 1.10180 to 1.101 maybe 75. So around this area, right? So that will be a buy and a sell condition for you, right? But because now don't forget our USD index is showing some strength, right? It's pumping, right? Look at it, it's showing some strength to the upside. So we expect a little pump. We expect a little pump at least to come and test this verified support, right? We expect a little pump to the upside to come and test this area. Now that pump we're expecting, or that impulsive move, right, as the case may be, that we're expecting, will mean that Euro USD will trade to the downside. So what I would like to do, I would like to enter a sell, but you want to wait, right, for the conservative trader, for the price to trade a little bit around this area. However, if you see a little retracement, like I always like, that will be a premium price around this area. You can still do a sell. Take note, guys, please. So if this price should pump further, right, around this area, I can still do a sell. So if this price should come up a little bit around this area, I can still do a sell. So I'm selling here. I'm equally selling if the price should trade around this region. Now, quickly, let me look at GBP USD. Now, if you look at JP USD, you will notice that JP USD on the H4 time frame, it is still on an upward trend. Yeah, it is still on an upward trend. Now, this is how you know that it's on an upward trend, because most persons will be deceived by this move. You can see this move down here. Oh, sorry. Most persons will be deceived by this move, thinking that the upward trend is over, right? But if you notice carefully, this was the leg, right? Or this is the structural low, right? That took out this high. This is what I mean. Now, this is the high. This is the high before we started trading to the downside, right? To form this low. Now, this was the low that was able, this was the low that was able, or that is responsible for taking out this high. So this becomes our new low. So until this low is taken out, I want to believe you understand what I mean by taking out. Until this low is taken out, guys, we are still on an upward trend, because this market can dribble and of course manipulate you to think that it has changed direction. No, no, please. Now you notice this movement to the downside. You notice it came very close, but it did not succeed. Let me put a line there so that you can see. If you notice, this movement down here did not succeed in taking out this low, that means whatever is under here is a protected liquidity, right? So that means our next target is to take out this high. So this will be our target liquidity. That means the point where we are targeting, right? Everywhere up here. So all of this up down move, of course, all of these are just, we can term them as internal structure of the market, right? Because we are seeing this market still going up to this target liquidity. Until this level is taken out, then you can now start having a change of mind, right? So having said that, now let me go to a lower time frame, 15 minutes, right? So that we can look at our possible trade direction. All right, so on the 15 minutes time frame, remember we saw some strength for the intraday traders, right? For the intraday traders, we saw some strength on the dollar, right? So we're going to take advantage of that strength. We're going to take advantage of that strength and see how. Let me go back to the H4 time frame. We're going to take advantage of that strength to see how we can make some profit out of the market, right? So two direction this market can pump because of that strength, right? This market can pump down to this level here because this market can pump down to this level, or it can pump down further to test this verified support here. So two directions it can pump down. However, if it pumps down to this level, let me draw a line. Now, what most persons don't do is after this analysis, most persons don't bother to go back and check what we have analyzed, whether the market is actually playing out following that direction. Please, as a trader, whenever you analyze the market or whenever the market is analyzed for you, please, you always want to go back after maybe 4 hours, 5 hours, or during the course of the day. Just go back and check, right? So we expect a move like this, and afterwards, the market should pump to the upside, and of course, see how it can be able to get to this target point. So back to our 15 minutes time frame. So I would like to do a sell, right? I would like to do a sell if this price can retrace a little bit towards this upside. So I'm going to sell around this area, right? I'm going to sell GBP USD, and of course that will be a pending order, right? So you can use a pending order, right, of a sell, and that will be a sell limit area around this price. So you may want to do a sell limit around between 1.24860 to 1.24965. So you want to do a sell around this area, right? So that means on this 15 minutes time frame, we expect a little move to the upside, right? And of course, if it happens, that will form a double top, as you can see, to form a double top. Then from that double top, we expect the move now to the downside, right? So we expect the move to the downside. So you want to sell around this area. That's the first one. That's the first sell. However, if it pumps down further for you, like around this area I gave on the H4 time frame, if the market pumps uh, lower, right? Or if the market moves down lower, you want to do around this area, you can do a buy, right? Or around this other area, you can do a buy so that you can start taking it to the upside. Okay, you can start taking it to the upside. Now, let me look at another currency pair. Let's look at Euro JPY, right? Euro JPY. Now, on Euro JPY, equally, we are still on an upward trend. As you can see, this is upward trend, right? Now, this is market structure, right? Trading to the upside, right? Breaking all of the structural high, pumping up. Now, but as you can see, we have gone through this structural high, so we're expecting a little retracement. Now, expecting a little retracement, that is the point where you want to use your Fibonacci so that you can know how much retracement to expect, right? So you can just use your Fibonacci tool here and draw from this structural low to the structural high here. So we are expecting this market to pump or to move down or to trade lower to around maybe 38.2. But I normally prefer any level around 50 and below, right? So that will be sufficient or enough retracement, of course. Once it goes below 50, I consider that as a discounted price, right? For you to buy more because we are rocking the upward trend, right? Rocking the upward trend. But guess what? We're expecting a retracement. So let's go to 15 minutes time frame or a lower time frame to look at for a downward movement, right? Look out for a downward movement. Now, let me do this so that you can see this clearly. So, if you watch carefully on this 15 minutes time frame, you can see that we consider all of this to be upward trend, right? Look carefully, please. We consider all of this to be upward trend. Am I correct? Yeah, that's upward trend. Now, at what point are we expecting, the market to now turn, right? At what point are we expecting the market to now turn? So, at the point where there is a shift, right? The point where there is a shift. If you watch carefully here, you can notice there was a shift here, right? By shift, I mean as long as we are rocking the upward trend, right? The low price will always be higher than the previous low. But if you watch carefully now, the market has pumped down. Possibly this will become the new low, right? So we call that a shift, right? Because it has given us a lower low. Upward trend, we're supposed to be seeing higher lows, right? But now we're seeing a lower low. So once that happens, that signifies a shift. So whenever there is a shift, right, or we call it change of character on the market, then we normally expect a retracement. So if there is a retracement back into this area that I would like to sell, please take note. A retracement of Euro JPY back into this area, I would like to sell. So now you can place your sell limit around this price. It can be around 148.515 to, so please, around this area 1.8.515 to 1.148.725. I believe you can see my screen, right? You can see the screen now. So around this area, right? So I would like to do a sell around 148, right? 0.515, and of course 148.725. So around this area, I would like to sell, right? To sell this instrument. But remember, on the H4 time, we're still on an upward trend. We are always trying to take advantage of the retracement to the downside, right? Of the retracement to the downside. Okay. Now, however, if this pump continues further, you may want to do scalping, but I strongly advise for you to wait for a retracement. Okay. Now, time is not our friend. Let's jump to gold. Let's jump to gold very fast. So after analyzing gold, or let's do USD card. Should we do USD card? I can see very strong movement here. Okay, let's do USD card. Okay. Let's do USD card, right? So on the USD card, what can we see here? This is what we're seeing right here is upward trend. But guess what, sir? Guess what? We are gradually seeing a shift of the upward trend. So this is the impulsive leg to the downside, and of course this is the retracement, right? So this is now the strong high. This is a strong high as long as it is able to take out this low. So the next move downward was able to take out this low. As you can see, this becomes the strong high, right? Or if you like, the a resistance point. Of course, resistance point are supply zone. So this is our supply zone, right? This is our supply zone. Now, the next time it move up, right? Normally to continue this downward movement, it's supposed to just move up a little bit around this area, right? Just a little bit above the 50%, right? So that will be considered as this premium price, and then of course push down to go lower than this low. But it did not happen that way. Right now, you can see that the price, the dollar has been able to push above this high. So once this price, of course, that's what we're seeing. This price has been able to go above this high. That becomes a shift, right? So we have shifted from a downward trend because of this price has been able to go above this structural high. We call that a change in character. So the market character have changed, right? It has changed to the upward side. And whenever it changes like that, Not too long, not too long, not too long. We're going to see a retracement to the downside before it will now continue the upward trend. So let's now go to 15 minutes time frame. Quickly, 15 minutes time frame. Wow, you can, on 15 minutes time frame, you can see how this instrument is pumping to the upside, right? So we have some strength. We have already seen some strength. We have already seen some strength. Okay, somebody's asking question here. That's Lizzie, right? Unegu. Okay. Say on Euro JPY, I believe that is Euro you were trying to type. Can the market move to 148.600? Possibly you have a trade there, right? So let me go back to that chart. 148.600. Let's check. 148. Of course. Of course, that's around this area. Yeah. Please, I said you want to do your selling when the market moves around this area. Yes, yes, please. That's true. So once the market gets around that area, you want to start selling. Okay, you want to start selling. So back to our USD card. Back to our USD card. As you can see on the 15 minutes time frame, the market has been able to. The market is pumping up seriously because we saw strength in the dollar, right? We saw strength on the dollar, right? So since we have broken this high, right? Since we have broken this high, for that strength to continue, we will need a little retracement, right? Need a little retracement so that we don't buy at a high price. So if this price can trade around this area, please you want to do a buy, right? if if this price can trade around this area, you want to do a buy around the 1.35690 to 1.35590. So around this area, you want to do a buy. So we just need a little retracement before we can do that buy. Now onto gold, please. Let's look at gold. Now on gold instrument, you can clearly see still on the H4 time frame that this gold has been busy pumping to the upside up until recently we saw a change of character, and this is what I mean by change of character. This is if you look carefully, this high is higher than this high. Normally the low is supposed to be higher than this low, but if guess what, the low came lower, as you can see, lower than this low. Now it successfully gave us two equal highs. If you look carefully, right, on H4 time frame, successfully gave us two equal highs and of course two equal lows. So two equal highs, two equal lows becomes a target for the market, right? Now this is like you facing the devil and the Red Sea, right? So this is a target point. This is also likely going to be a target point, right? So once any of these target points is taken out, then the market will be moving to target the next point. This is what I mean. If this market retraces, right, and is able to take out this equal low, this is what I mean. This is a low and this is a low, equal low. This is a high, this is a high, equal high. So if this market retraces further and is able to take out this low, something like this, right? So that means it has been able to grab the liquidity down around this point. The next target will be to target these equal highs, right? To take out this high. So therefore, if the market move lower around this area, right, on the H4 time frame, you want to consider doing a buy trade around this area, please. If the price can retraces further around this area, right, want to consider doing a buy. But however, on H4 time frame, let's go to 15 minutes time frame so that we can look at for trade direction of this lower time frame. Okay. So this was the line we drew. So this was the line we drew on the we drew this line on the H4 4 time frame, right? Expecting a move to the downside, right? Expecting a move to the downside. So since we're expecting a move to the downside, I will still want to sell, right? So if this market can retrace a little bit towards this area, if gold can give me a little retracement, right? Why am I looking for retracement? Now is because if it retraces, it's retracing to a premium price. Remember, you always want to sell at a high price, right? So if it retraces to this area, then I would like to do a sell, right? If it retraces to this area, I would like to do a sell. Please, you want to sell gold when gold is around 199.30 to around 2000. So anywhere around 2000, right? Immediately gold touch 2000 ounce, you want to sell gold, right? So that means a little retracement upward, I would like to do a sell, right? However, for the aggressive one, because this gold is very aggressive, right? I mean, it's very volatile. I mean, so if gold pumps below this our weak support, so anywhere below this area, I will still want to sell. Please take notes, right? If gold pumps further below this area, that means it fails to give us a retracement before pumping down. So if it goes below this area, this support here, so anywhere around this region, let me show you the price around that area. So if gold should pump further anywhere around one one 1985, right, to 1984. So 1985 to 1984, around this area, I'll still want to do a sell. Now once you sell, your target should be this support, right? Your target should be this same support, right? So please, if it pumps to the upside, we are selling here. If it moves down to the downside, we are equally selling there. So now let's look at the index. Okay, Mr. Dada, you say you cannot hear. Really? Please, the rest of us, can you hear? Let me know whether the issue is from my end. Please, if you can hear me, just type I can hear you. So let's confirm it, please. Hello, everyone in the room. If you can hear me, okay, Emmanuel Mills, thank you very much. You can hear me. Please, this is also being recorded, okay? So, Mr. Dada, this is also being recorded. So at the end, you can ask for the recording, okay? Which I'm also going to give you. Okay, I'm also recording this. Okay, so this is simply market structure analysis, because the market structure is simply the language of financial markets, right? So guess what? You are in a market and you don't understand the language. You come back with empty hand. Why? Even though they are selling things cheap there, very cheap, very, very cheap, you will not be able to buy because you don't understand the language. In the same way, structural analysis, just like I am doing for you, is simply the language of financial markets. So forget it if you don't understand this language, right? The language of breaking the structural high, breaking the structural low, the language of break of structure, the language of shift in character. If you don't understand these things, it means you'll be on the market, you don't know what the market is trying to do, right? You don't know what the market is trying to do. Please, I think it's also being recorded, so you can also get the recording. So please, once again on gold, let me just summarize by saying, once this market pump to the upside around this area, then I want to do a sell, right? I want to do a sell. But somebody will be thinking, Emmanuel, why wait for the market to pump? Why not take a buy for it to pump? Now, in trading, we always like to trade setup, right? We don't just trade anywhere, we trade setup, and setup is an area, or is the area where we have the highest probability of price going in our direction, right? And of course, that will likely going to be your discounted area, right? That means low prices for you to buy, or your premium price is high prices. So that's how we analyze this market. Okay. Now let me look at the US index, maybe US 30, right? US 30 quickly. Now the index, or the US 30, as you can see, it's still pumping to the upside, right? Still pumping to the upside. So on the 15 minutes time frame for intraday traders, I like looking at 15 minutes time frame for intraday traders, right? So we have a support here, right? We have a support here. we have a support here. So that means if this price can retrace to this area, if this price can pump further to this area, I would like to sell there, right? Right? I would like to sell there. However, if the market price can trade below my support, right? If this price can go below this support, I would also like to look for a sell below this area. So if the price can retrace further towards this proven resistance, as you can see, that's a proven resistance. At this point, I would like to take a sell. However, if this market can trade below this area, right, I will still want to take a sell. Why? I am expecting retracement to the downside on the H4 time frame. I'm expecting further movement to the downside. Look at what I mean. So it's already the move have already started, right? So we need this move to retrace further into this area, right? Further into this support area. So that's the analysis there. So you're asking of the record in place. I'll drop my number, okay? By the end of this, I'm going to drop my number. Then from the number, you chat me up, okay? You chat me up. Then I'll tell you how you can get the recording, okay? So okay, Galaxy, that's not your name. You're asking where is the take profit and stop loss. Please, stop loss is your risk mitigate, right? So you want to take a risk that is okay for you, right? You want to set a stop loss that you think is okay for you, and your stop loss amount should not exceed 1, 2, or even 3% of your account size, right? Very important. So you can just do that. It's risk tolerance. So it's just the risk you can tolerate. Okay. So if stop loss is given to you, fine. But if stop loss is not given to you, you can generate your stop loss by yourself by using your risk tolerance, right? How much risk can I tolerate on every trade? 1% is good, 2% is good, 3% is also good, very fine, of your capital, okay? Of your capital. Most persons do 5%, which is not also bad, right? Which is not also bad. So somebody is asking of oil. So let's look at oil here. Okay. So this is oil. Now, if you notice, we saw a very big gap on oil, right? Very big gap, and that gap up, right? Now, gap normally signifies pressure, right? Momentum, right, to the direction of the gap. So if it is a gap up, it means there is push or there is force pushing the price upward, right? Now, if it's gap down, it means a force pushing the price downward. And of course, after that gap, you can see that there's more impulsive move, right? Now, remember, whenever we have impulsive move to the upside, we normally expect a retracement, right? So if you watch carefully, so this is where that impulsive move started from, down here. So I can draw my Fibonacci right from now. This is still H4 time frame, please. Can draw my Fibonacci from this leg here because this is where we experience the first change of character. I want to believe you understand what I mean by change of character. See what I mean. So oil was trading to the downside, right? This is a low. Then it went up to give us a high, right? It came down again to give us a move down again to give us a lower low, right? That is characteristics of a downward trend, right? This is a break of structure here, BOS, break of structure. So now, if you notice, the next time it moved up, it's not supposed to go higher than this high. But guess what? It moved higher than this high. It made this price move higher than this high. It means there is now a shift, right, in the market structure. A shift in the market structure. So if there is a shift in the market structure, which structure? The structure was down, as you can see, it's down. So if there is a shift means if the downward structure have shifted, it means we are now or potentially rocking the, we are now about to enter the upward trend. That's the meaning. That's the meaning. Potentially rocking the upward trend. And whenever you experience a shift like that in market structure, no, always wait for a retracement, right? That will give you a cheaper price or a discounted price for you to continue the upward trend. If there's a shift, right, when the market is going up, you wait for a premium price for it to continue the downward trend. That's how this market works. So this is now the discounted price, right, into the area, and this is where the move started from. So this is the reason why drawing my Fibonacci, I want to start from this level. You understand it now, right? So I'm going to start from this level. This is where we started experiencing the move to the upside, right? So from here, and we saw this gap up. Remember, this gap up is momentum pushing the market upward, right? Now you notice that after the market has moved to this level, it started retracing, right? It retraced to very close to my discounted price. That's the 50%. Then from here, we start seeing some move upward. So from here, we're expecting the market now to start trading to the upside, right? Now, this is technically speaking, right? Technically speaking, and of course, from the chart. Remember, you trade what you see on the chart, right? You trade what you see on the chart, and this is what we're seeing on the chart. So it has gotten now. If you zoom into this area, you can see that we have a support level here, right? So we are seeing oil trading to the upside, right? To the upside. So if oil is trading to the upside on the 15 minutes time frame, that is when where intraday traders can now look at for trade direction. Okay, if oil is trading to the upside, now you want to do a buy, right? Now I want to do a buy on a support level, right? Remember, you want to buy on the support. Support is a low price. So if this price retraces further to this level, I would like to do a buy. What if it pumps down lower to this level? I would like to do a buy. So buy on these two levels. Take note, please. Buy on these two levels. Now, how can you do it? You can enter a smaller lot size here, right? Maybe 0.02. If it pumps down further, of course, giving you a discounted price, you enter more of your lot sizes here, right? You understand what I mean? So these two levels are areas I would like to do a buy. I would like to do a buy for what we have from what we saw on the H4 time frame, right? Oil will be pumping more to the upside. Of course, yesterday we saw it pump to the upside after this change of character here. So please, we will be buying oil around this area. So let me point it for you. Around this area, we're buying oil, right? What if it pumps down further to this area? We also still like to buy the oil. Okay, so please take note, and this will be around the 82.35. Even if it pumps down further to 81, I would still like to do oil. Okay, like to do a buy on oil. So let me look at the chat room for more questions. So please kindly share your number so that I can request for the recording. I need to jump into another meeting. Thank you. Okay, that's about today. All right, I will share it right now. So somebody's asking us to check corn. Okay. Now, okay, please the analysis we did on US 30 can also be used for US 100. Okay, US. Okay. All right. This instrument US 100 is very volatile, right? Very volatile. Now let me first look at what the structural analysis is telling me, right? And that will be on the H4 time frame. That will be on the H4 time frame, right? Okay. So you can see that this market has been trading sideways for some time, right? But however, this is still rocking the upward trend. This is what I mean, right? This is what I mean. This was a pump. If you don't carefully look at these things, that is where the market gets to dribble you. You don't understand the direction. And once you don't understand the direction, it means the market will dribble you, play you out. So this was the low that was able to take out this high, right? Now up until all of this movement you see up, down, up, down, up. Now this low has not been taken out, right? So until this structural low is taken out, because it was this low that gave us this break of structure to the upside here. So once this price pump and goes higher than this high, We call that break of structure. You already know that. Now this low has not been taken out, right? So until this low is taken out, then we can now say the market have shifted. Okay. So on the H4 time frame for my swing traders, right? On the H4 time frame, US 100, right, is still going up, right? On the H4 time frame, it's still going up. It's still going up. Now, however, let's stay on this H4 time frame. We can see that this market has been able to build. This market has been able to build support around this area, right? And of course, it has been able to build for us resistance. So if the market can build support and resistance like this, we say the market is ranging, right? So this is a range. How does it range? It trades to the upside, the upper band, right, or the upper side. Then it trades to the lower side, right? So, however, looking at the range, let me zoom into the area. Looking at this range, so since it has traded to this downside, right? So we might likely see another movement trading to the upside because that's what it has been doing, up, down, until finally it breaks out. So 15 minutes time frame, let's look at for trade direction on 15 minutes time frame. So let me zoom. So on the 15 minutes time frame, we are seeing, if you look carefully, you will notice that this movement is going down, right? So this is lower low, lower low, lower low, lower low, lower highs rather, and of course lower low. You know, so from what we drew on the H4 time frame is this line. So if this price, of course, it's already rocking this level, right? But I will need more movement. I will need more movement to the downside, right? I'll need it to move to the downside because it needs to tap the liquidity around this area. So if it moves down to this downside, and that is when we can now start expecting the movement again to the upside. So on please on US 100, right? So we're expecting this kind of move, right? But we expect it to move further downwards. So I'm expecting more bearish movement to the downside. Then afterwards, it moves to the upside, right? So you want to do a set, so you want to do a buy if this market trades below this area. So if it trades around this area, then you want to think of buying. So I'm trying to highlight the area for you. So anywhere down here you want to do a buy, okay? Anywhere down here you want to do a buy. Okay, I think we cannot 26, 45, 07. Okay, for the person that said he has a meeting to attend, let me drop this number for you. Okay, I think that's my number. That's for everybody. Okay, please, on US 100, so you want to do a buy if the market can trade around this price here. I'm hovering my mouse pointer on it, 12940, right? Around this area, you want to do a buy, and of course, if you do a buy, your take profit will have to be around this area, right? The next level of resistance, okay? Please, we cannot be able to continue further because I think it's already past 9. So thank you very much.